Is the stock market headed towards a recession? That is what we are going to talk about in this video here. I'm going to analyze the S&P 500 ETF stock symbol SPY. Now, the market is about 8+% off of its all-time highs. It's been as much as 10+% at one point, almost 11. Since then, over the course of the previous two trading sessions heading into today, we saw a market bounce, a two-day market bounce. And it gave a little bit of hope, a little bit of optimism that we might actually see a short-term bottom being put into place before there's possibly another leg lower. And you want to remember this too about stock market sell-offs is that the bounces in the stock market sell-offs can be as lucrative, if not more lucrative, than the actual sell-offs themselves, and even easier to trade than the actual sell-offs. So a lot of traders then are waiting for that first or that initial market bounce that's really been elusive to this point. Up until yesterday, we hadn't even seen a two-day bounce in nearly a month. That is pretty rare considering the kind of run that the market's been on over the last 2 years. So in this video, let's identify, using technical analysis, where the key levels of support and resistance are, the trend lines that we need to be aware of, and if this market breaks to the downside, and then we start breaking additional levels of support, where can we ultimately find a market bottom at? And in the case that we do get a solid bounce here, we have FOMC coming up tomorrow. We have options expiration at the end of the week. If we get a market bounce as a result of those events, how high could that bounce go? We're going to analyze that right now. So we have a double top on this chart. This is what pretty much got it all started. Double top is where you have two nearly equal points on a chart at the top of a rally that eventually lead to a market downturn. And so we have the first top here, and then we have the second top right there. You have where it confirmed right here at about 577, 576. We had the breakdown here. We got a nice little two-day bounce. That was the first one since the market topped out back on February 19th. But today, possible that this dead cat bounce has already run out of steam, and that's a big concern, especially when you consider the uptick in volume that we got too compared to the previous two trading sessions. So if we're going to see a bigger push to the downside from here, this is it. This is the next legs getting started here. What is the next level of support that we need to see in terms of whether or not it can hold? And that is this level right here that it's already tested last week. We tested this level back on Thursday of last week. It held. We got a two-day bounce off of it. But if we retest it again, that's what we need to see. Can it test? Can it hold? And can it bounce? So far, we got a little bit of a bounce, but it wasn't that much. It was very difficult to extract any profit. In fact, I think I got 0.02% out of that bounce. I did not make hardly anything off of that bounce for myself. And that was with a 2-to-1 inverse ETF. So if it was just the SPY that I was trading, it would have been like 0.01%, pretty much the bare minimum. This is going to be the key level here. We have to hold this rising trend line. I'm sorry if my big old head was blocking that a few seconds ago, but this is the key trend line. Got to hold that level. If we do hold that level and we start to bounce, where does it take us to? Well, you have, again, the double top confirmation level. This is going to be around that 575 level. Can it push beyond that? And before it gets to that level, you also have the 200-day moving average right here. That's this little squiggly white line. It has to break through that as well. Of course, the 20-day moving average has been known to be a level of resistance on bounces following a significant sell-off. So the 20-day moving average, which really hasn't been tested much as at all, that could come into play too. But these are the three levels that I would be watching for: the 200-day moving average, the price level support at 575, and then this 20-day moving average right here. If it gets beyond those levels, then a lot of people will be talking about all-time highs possibly getting tested again. I think that's maybe a little bit of a rush to judgment, but you do have some price level resistance right here in this level here. It's very choppy, but I would pay some close attention to like the 594 level. Far away from the 561 that we're trading at though right now. Now, let's say it gets really ugly and we break this rising trend line. Where do we go from here? And that's the much bigger question that needs to be answered. So in order to do that, what we need to start looking at is potential trend lines here. We have this particular trend line that goes back to 2022. I don't know if that's that big of a deal right there. That's not something that I would really get too worked up about. What I'm probably more interested in is this trend line here that goes all the way back to 2020 lows. And this trend line could definitely have some merit to it here. That is a significant trend line. And this could be where the market eventually bottoms out at. We break through support here at 551 and we come all the way down to this 490 level. I think if we break below 500 on SPY or 5,000 on the S&P 500, that is going to be a serious mental barrier that has been broken, and it's going to create a lot of panic among traders. And it wouldn't surprise me if we just dipped a little bit lower and then we finally bottomed out before eventually bouncing back to the upside. Now, let's go doomsday a little bit here. And I hesitate to do that because a lot of people will take the worst possible scenario and say, that's what he said would happen. No, that's not what I'm saying is going to happen. I'm giving you different scenarios to be mindful of. I want you to have a short term, a medium term, and a long term version. Let's look at the really long term outlook on this particular scenario. And this goes back to the 2009 lows. Now, notice how a lot of these trend lines start at significant market bottoms, like the 2008 Great Recession. When it finally bottomed in 2009, it started a whole new trend line that's been tested on multiple occasions. This red line here was tested back in 2011. That was when you had the European financial crisis. And then we didn't get tested again until 2020. And then following that, it has yet to be tested again. This would be a scenario where we're entering into like a Great Recession, similar to like what we saw in 2008. This would wipe out a lot of traders. I mean, a ton of traders. And it would, yeah, I don't really even know how to put it into words, but it would be massive if that happened. Now, as I'm just talking about this, I think this is kind of interesting. I haven't really noticed this before. But you could make the case that we have a little bit of a parallel channel here. Not perfectly parallel channel, but we've been somewhat trading in a parallel channel going back to 2020. So that's something also to keep an eye on. Maybe we have some resistance there going forward that if we did bounce to the upside, we would want to pay attention to where that coincides with this rising channel, the upper channel band. But without getting too off track here, this is the two levels that I'm pretty concerned with here. If we break this support level here, and again, this is a weekly chart that I'm looking at now. If we break below this support level, we want to see what happens if we go back down to this 490 level, because look, there's not a lot of support levels underneath this. I mean, you break this level here, where else is it going to find support? It's going to have to carve out new support. Maybe it does that by bouncing at 510, or maybe it does so by bouncing at this level right here, or perhaps at one of the previous lower lows from 2024, April 2024. If it did that, that would be around 495, which would be in conjunction with this rising trend line. So that's the different scenarios we're playing with. There's not a lot of support until you get down to this 493, 495 level, depending on how long it would take to get down there. So it's critical that the market holds on to this level here. And again, this red line here, that's only a worst case scenario, in my opinion. That's not even really something to be pondering right now. I think if you get past this white line, then you start to look at the yellow line. If you get past the yellow line, okay, you start to wonder, how bad could this actually get? What's the key here? How do you prevent yourself from just getting completely wiped out by this market? I know there's a lot of fear and there's a lot of panic about what that means to their portfolios, that the stock market keeps going down. It's the reason why managing risk is so important. Managing risk is not as exciting during a bull market. It's not something that people really take serious in a bull market. But you have to do it in a bull market in order to be prepared for it in a bear market, in order to be able to weather the storms that eventually come with a market that's headed lower. If you're not managing the risk, you really open yourself up to really getting taken out. For me personally, I don't care if the market goes higher or lower. I'm not here trying to be a bad news bears kind of person or trying to tell you that the world's coming to an end. That is not what I'm trying to do here. What I am trying to do is lay out the different scenarios. If the market bounces here, great. If it goes up to all-time highs, fine. I'm totally good with that. If the market sells off and it keeps going lower, I'll be in a position too where I can weather that storm as well. Along the way, even with my long-term investments, I've got it down to a level that I am comfortable with weathering the storms on because I've been taking profits along the way and managing my risk accordingly. If you enjoyed this video, I would encourage you to like and subscribe and let me know down in the comments below, what is your target price for where SPY is going? Do you think that we are near a bottom here, or do you think we have much further to go? And if so, let me hear the price. Let me know what you're thinking. Thank you guys, and God bless.